G'day everyone, my name is Justin Flitter. I'm the Chief Marketing Officer for playbooks.live and the Community Ambassador for Playmakers, which is our community for ambitious business leaders, entrepreneurs and owners who are looking to gain access to the expertise they need to thrive. And today, I've got the wonderful Amanda Fisher here, the Cashflow Queen, who's the author of Strangle by Numbers, to help us unlock the secrets of business success. And we're going to have a chat about cash flow tips and tricks and understanding the numbers. So Amanda, welcome to the show today. It's awesome to have you on board.
Thank you. Thank you very much for the introduction, Justin. I'm looking forward to seeing what we end up talking about.
I know. We've kind of got a few notes, but these conversations can go down many paths. So first of all, I wanted to know a little bit about you. What's your background? What brings you to being the cash flow queen and helping lots of growing companies and people starting their businesses understand the numbers?
I'm a chartered accountant by background, and I've spent my fair share of years, and I'm not going to confess to how old I am, but I've spent my fair share of years in accounting practices doing the normal tax and compliance work. But I've also been on the other side of the fence working as a financial controller, a CFO in businesses. And what I realized over a period of time was that business owners don't know a lot about their numbers, and there's not a lot of places to go and get it. And hence the reason I reinvented myself, if you like, as the cash flow queen. And look, that name was one that somebody suggested it to me quite a while back, and I went, nah, I'm so much more than cash flow, for starters. Number two, calling myself a queen, that sounds a bit up myself kind of thing. I went, nah. And then it kind of stuck a bit more, and I went, you know what, okay, it's a brand, we'll run with it. And it's been really, really successful in that way. But I reinvented myself as a financial educator to help fill that void, that gap on the knowledge that just so many business owners don't have a clue.
I guess a lot of people get into business because they've got a fantastic idea. They've perhaps already got a couple of customers that are ready to buy. They've got a great product that they think or they know that people want, and they start getting through a few phases. They might get to tax time, they might get to the bills start ramping up as things start coming in, and they kind of need a bit of advice around, so what's happening? How do I plan? So what are some of the kind of common conversations that you're having with big people?
And you're right. What tends to happen is most people do exactly that. They've got the great idea, they get out there, they hustle, they start getting some sales, and then they get to a point where they go, oh, do I need to worry about tax and taxes and like what's all that mean? And so I need to talk to an accountant, and that's fine. But then they tend to get a little bit further down the track with but I don't really know what these numbers are. My accountant's telling me to sign here. And look, that's being a bit unfair to the accountants, of course, because a lot of them do more than that. But there's still kind of this lack of knowledge, this lack of handing on that information. Accountants kind of, in many cases, certainly the old school ones, perhaps the younger ones a little bit better at it, but the old school ones were very much, well, I know how to do it. It's just, it's my expertise and you don't really need to know about it. It's like, no, that's not right. You don't need to be an accountant as the business owner, but you need to know what the numbers are, what they mean, how you can use them to make decisions. And to me, it's not about looking over your shoulder on the historical reports. It's about looking to the future. What's the future about? Yes, your tax accounts and accounting records, they're fine. We need to have them. But it's about looking forward. And that's so often where accountants just don't have the time to spend. A lot of it is that we're massively overloaded with work and have the time to spend to help them with that. So the questions I'm often getting are around, can you help me to understand my numbers? My accountants suggested I get some advice on really understanding what's my gross profit, or I just need some help planning for the future. Sometimes it's about looking for finance. I need to put a cash flow forecast together. Can you help me with that? Those types of questions are the ones that are popping up. And often it's someone else who's saying, you need some more help on this. Go and get some advice, find out about what the numbers really mean.
Is it kind of looking at, I suppose with a lot of professional services, and I know you kind of typically work with professional services, don't you? So I guess with that, it's looking, we're selling time. So, we're looking at those billable hours, right? And so what's that pipeline? And I know, myself, I've been freelance contractor, I've run my own agency before, and you get stuck with, you get busy with 2 or 3 clients that have taken up your time every week, and you forget about what's next. And like, who's the next client going to be? And you kind of get, you get absorbed in, your current contract, but you're not thinking about that in 2 months' time, where's my next client coming from? So I guess there's lots of conversations around that as well, about making sure that people are thinking ahead.
Yeah, that's right. And the other side of that, which is one that many people do, yes, professional services, anybody that's selling time for money. If I flick it around the other way, if you think about selling a product, so you've got a shop and you've got products you sell, from an accounting perspective, we've got the cost of the product as our cost of sale, and then the revenue, and we work out what we then call the gross margin. What's your markup, what your percentage is. In time selling businesses, service-based businesses, traditionally we haven't done that. And it's one of the first things I do is say, okay, how can we keep some time records or some reference on how much time is being spent delivering the product, like doing the service? So you've got your admin time, you've got your selling time, and then there's the delivery time. How much time is in delivery? Is, if you've got a team of people, is, just 2 or 3 of them, they're 100% on delivery. All their costs should be in costs of sales. Because one of the mistakes I made at one point in one of my accounting practices, I've had a couple along the way, was I was hustling hard to get the income in, but I had massive inefficiency in the team. So I'd be selling the job for, say, I don't know, $2,000, but the team would be costing me $2,000 in delivery when I was thinking they'd be costing me $1,200 in delivery. So, so I'd think it'd be a 10-hour job and they take 20 hours or, whatever the things were. So by having that in your cost of sales so you can track it, you've got a much better idea of what, of whether or not you're actually making money on the contract, as well as what's the next contract coming up, and having some time specifically for that ongoing selling process.
So over the last year, we were talking before the webinar and yesterday about, we've had some tough times. Every business has gone through lockdown. Some businesses have been forced to scale right back as people are unable to. So what has been the changing nature of the conversations that you've been having with businesses in the last 6 to 9 months as they challenge with those situations?
Yeah, I mean, certainly it's a combination of, I think, what happened when the lockdowns first happened, aside from the horror of it, the whole, oh my God, what am I going to do? How am I going to cope? What's going to happen? I've got no income, or I've got little income, So I think what happened very quickly for a lot of business was a complete cut out of any expense that wasn't absolutely necessary. And particularly for the bricks and mortar type businesses, it was absolutely just cut. So whilst that was, necessary at the time, I think, in some cases it was a cutback a bit too much, and then it meant a problem then moving forward. But for some of them, they just didn't have a choice. For others, it was about, it is about looking at, again, it's looking to the future. What income do you have that you know of? What can you do differently to create some income? So looking at opportunities, obviously, some businesses have pivoted, that word we've thrown around 1,000 times in the last couple of last 12 months. They have changed what they're doing. But it's about looking at what are those costs, looking forward, what's the income, what are your expenses. And in the ordinary course, in the old, sort of pre-COVID days, that would be something I would always talk about is what are your expenses? Do you look at every single line item, every single amount going through? Are you using it? Is it essential? Is it discretionary? Where's the value in it? And those monthly subscriptions to all sorts of things that if you're in the new tech world these days, you sign up for and you try it and then you stop using it, but it's on an auto on your credit card and it's still going through. So can you cut them out? So I think a lot of people did a lot of that early on. And now it's about how can we rebuild, because you need that cash buffer. And unfortunately, so many people just didn't have any cash buffer. And that's what has really, really hurt people, is not having any funding that would help them through, a week, let alone 2 weeks, let alone months of business at a lower level.
Yeah. It's been so tough for a lot of business, hasn't it? And I guess, a lot of them will be looking at, how do we defer payments? So is it, a case of it helping people figure out what payments can we hold back for a little while, and then negotiating with suppliers or people around that, right?
That's right. And I've seen lots of my clients do exactly that. It's, how can we put payment plans in place with the tax officers? How can we even had one that made arrangements with some of their staff to defer payment of wages for a period of time. I've had others that we have looked at with suppliers, particularly again your physical stock products, working with their suppliers of those, particularly on delayed payments to ease that burden, so that the cash flow can more likely marry up with what it needs to be. And then one of the other challenges for the hospitality type industry is a lot of those were casual workers. They've all had to be let go, and now you're there with a cafe with you're the owner and you've got no staff, can't afford to pay staff. Like how do you rebuild? And certainly in Australia here we have a lot of backpacker community that used to fill a lot of those types of jobs. Obviously also some of the farm work jobs. I do work with farmers as well. And it's a serious problem because, I was actually up in Cairns the other week and I got a ride with an Uber driver, and she said, they provide limousine services to the airport. And when COVID hit, all the parents were phoning up their children that were over here saying, I'm buying a ticket, you get on the plane tomorrow, I'll pay your way home, to get them back home. So, we've lost so many workers, and that in itself is another challenge on how can you build your business up, when you don't have the staff they're just not there.
Not there, yeah. Okay, so a lot of businesses are now, we've managed and wrangled and juggled our way through what's been quite a messy situation, and we're coming out the upside. We're now we're busy. There's a lot of activity in the market now, and we're starting to, look forward and really plan ahead. How can we scale and thrive? To be able to do that, you talked about understanding the numbers. So from what reports, what management reports should business owners be looking at, asking for, collecting data for, to help them do that?
Yeah, I think one of the first things I suggest is looking at your profit and loss, but not just the profit and loss. Looking at what are the different types of income streams in the business, and getting your accounting records to reflect that, whether you're using tracking categories or tags or projects, whatever the accounting system is and whatever their terminology is, so that you can start to see where the income's coming from, where the profits are arising from. So it can help to make decisions around where you need to focus your time and energy, So that's one of the first things, is looking at that P&L in a slightly different format that gives more information. So it's about just sort of delving deeper into the numbers. The other thing that's a big one that unfortunately most of us don't enjoy doing is, of course, the debt collection issue. So looking at accounts receivable, how much money is outstanding, what can you do to assist in recovery of that? And of course, it's the chicken and the egg exercise. We as business owners are trying to put payment plans with our suppliers, and on the other hand, they're wanting payment, and from us, we're wanting payment from our customers. So it's a real juggle, some of that. But knowing where those are and just continuing to be in contact with those customers that haven't paid, that are behind, and trying to get them to pay you a little bit each month, that kind of thing, I think makes a big difference. So those are the two main reports that I look at. And beyond that, it's the cash flow projection. So budgets, yes, but for me, it's that short term, possibly weekly, if not monthly, and depending on the size and scale of the business. What do you expect the money to come in over the next 12 weeks? How much money in, how much money out? What day is payroll go out? What day does the rent go out? And making sure and looking at that, which is why sometimes doing it weekly is more useful than monthly, because you can have payday, the rent, and I don't know, or everything else sort of hits on 1 week of the month. But you need to make sure you've got the funds coming in. And the other thing that I encourage people to do, and this is really hard when cash is tight, but is to start put a bit of money aside and start building up that cash buffer. It's not easy, I know. One of my clients has been putting 1% of their revenue aside. So they get to the end of the month, look at the total revenue, and is just pulling that amount of money out of the bank account into a savings account. And obviously the revenue is a reasonable number, but she's got $31,000 in the bank now. Now that doesn't, because the business is quite large, that doesn't cover a month's worth of expenses yet, but it's getting there. And just slowly building that up. I think the other thing that I found when that's the case is your mental mind, it changes your mind. When you're no longer worrying about, oh gosh, I've got to pay X to the end of this week, and I need to get some money, and you're in that kind of stressed money situation. When you've got funds there and you go, yep, I know I've got money to do that, it actually brings more money in. You kind of become more, people want to deal with you more because you're no longer that stressed. Oh, I need the money. Please pay me now. Please, please, please. I beg you.
What a bit of breathing room, right? That you've got, is there a kind of a general rule of thumb that you recommend for that? I mean, you mentioned that company doing 1%. Is that, should we really be looking at sort of 5 or 10% if we can? I mean,
absolutely. I mean, if you're struggling, then 1% is a good starting point, but I would be saying more like 5 to 10. The aim of the game is to build up 3 to 6 months of expense cover in your bank account. So, and that's not an insignificant amount of money, no matter what scale of business it is. It's a serious chunk of money. 1 month is good, but it's not going to last you long. But it's not something you can kind of turn around to anyone and say, okay, well, you need to have $100,000 in your bank account, and you kind of go, yeah, but where that's coming from. But if you can start putting a few thousand in each month, it'll build up over time. It's not going to happen overnight, but the more the better. And particularly if you need to. So one of the other things I do is recommend is where you've got GST and payroll taxes and those things, put those aside as you go every week, every month as well. So, that might be one account, and this other might be a different account, just so you've got, so it becomes less of a chore. A little bit each month is much easier than finding a big chunk at every quarter or once a year.
When we're for professional services, often it's kind of project-based work or job by job, where it might be a fixed fee or a project fee. are you seeing any like more professional services adopt a subscription-based model to, I guess, expand out that cash flow and make sure that you've got more of a consistent amount coming through? Is that helpful?
Yeah, I'm certainly seeing more of it. More of it. It's certainly been a bit prevalent in the accounting industry for a little while now, with fixed fees and often on a monthly or quarterly payment basis. So it kind of helps the business owner, helps the accounting firm, map that out. But yeah, it's interesting seeing it in some of the marketing companies are doing some of that sort of stuff now. I am seeing it in some of the accounting bookkeeper type stuff. It's the monthly fee. This is what it is, and this is what you get for it. And you sign up for periods of time. And I think there's more. I think what we all like is knowing what we're going to pay. So some kind of fixed number is really important. And the second thing is being able to spread things out over a period of time also really helps from both sides, really. So I see a lot more of that coming through and other industries picking it up and doing things in a different, innovative way that perhaps their competitors aren't doing. That is doing that fixed fee subscription monthly exercise. And certainly it's very much happening in the kind of that information space. So where sign up as a membership for something and you get XYZ each month, and those sorts of things that works really well.
So lastly, I just wanted to kind of finish off with, what are some of your best practices of advice to build a strategy for managing those short-term cash flow challenges? So, how do we juggle the books and juggle our suppliers and make sure that people are paying us on time so that we can confidently manage those short-term cash flow problems?
Yeah, I think firstly, part of it is very much around the communication. So communicating up front with easier with new customers than with existing ones potentially. But these are our terms. This is what we expect. Are you okay with that? Getting that kind of signed off, and then when they're not paying, having the conversation, not being afraid to pick up the phone and talk about your account's overdue, what's happening, where's it at. We've got to do it. I know none of us like doing it, but we do have to do it. And I have to say, as an accountant with some of the accounting knowledge, what's going on in the client's business, where it's the hardest for us to phone up because we know exactly how they can't afford to pay it. But however, you don't know that in the normal course of events normally. So that's one thing. Again, same thing with your suppliers. Keeping that communication open, making offers for payment plans. I've done this in the past, nothing to do with COVID, just as a means of helping a company that's in strife to get through and negotiating. And even in one case, we had a situation, they were paying off a certain amount each month or each week actually, and then they were COD for all their new deliveries. So they were paying cash on delivery for the new, and they were slowly chipping away at the old. And yes, it took them a year or even more, I think, to pay off the old stuff. And when they finally did, they just kept going COD because it worked for them. Right. So finding different ways of doing that and doing that week by week forecast. Look at where the gaps are. Where have you got a problem where you've got more money going out than coming in? And then look at what can you do differently? Can you shift the payments out later? Can you talk to someone to get payment in earlier? Or can you do some other work? This is something else you can sell. This is something else you can do that could bring that bit of extra income in. So looking at where those gaps are. And the other thing that is inherent in every business, and the timing depends, but there's invariably 1 or 2 months of the year where income's low. Now, it could be end of financial year and people kind of stop spending before the end of the year and then they don't spend for a month or so after. It can be, Christmas, summer holiday, shutdown type things, but factor that in. So look at how can you make sure you're recovering all your costs as a bare minimum in, say, the 10 months that you should be trading well, so you can cover those couple of months when perhaps income is dropped or low, or cash flow is low. So looking at, planning out the 12 months, but so trying to put that bit of extra money aside for those lesser months.
So 3 things I've learned from you today that I think will kind of sum up this.
Okay.
Really good communication. So set the expectation and communicate well with customers and suppliers to make sure that there's no awkward conversations down the track.
Yep.
Make sure you understand the numbers, so you're reviewing them weekly or monthly, and you're not just taking what the accountant says, but you understand what the accountant's giving you as well. And to create a bit of a buffer for yourself.
Yeah.
So even if it's 1 or 5 or 10%, something which gives you a little bit of breathing room, so you're not panic mode all the time.
Correct.
Yeah. Would that be about right? Is there another takeaway from you that you think we should add to that list?
I'd like to just add that, do that forward monthly or weekly projection for say 12 weeks, and just keep updating it. Yeah. So look at it, what did you think was going to happen? What did happen? And then can shift it out. Just keep that focus on the future, and plugging the gaps where you need them.
Awesome. Well, thank you so much for joining us today. I really enjoyed it, Amanda. It's been really insightful, and I'm sure everyone in our Playmakers community is going to enjoy watching this video at any time. So I really appreciate your time today. Thank you for sharing your expertise with us. And we look forward to the next book, which whenever that's coming out. I know it's brewing in your brain there, but I look forward to seeing that in the near future as well. So thank you so much for joining us today, and thanks to everyone for joining on the webinar.
Thank you, Justin, for having me. It's been great fun.